All right, what is up, everybody? Divine Hood here, coming at you with a daily update on Bitcoin. So, this weekend, Bitcoin has just been ranging like we expected, kind of a low volume range that Bitcoin is doing. Now, earlier today, we did see a short squeeze here. It was a few hours ago. We saw a short squeeze, and we could tell this was a short squeeze because if we look at the open interest on this push up, we can see that the open interest was decreasing the entire time. See, this entire push up here, this last big part of it was a short squeeze. So it was shorts getting stopped out or liquidated. We pushed up to our local highs that we created on Friday. Let's zoom out of here real quick so we can look at that. We had our highs that we created on Friday. And since Friday, the entire weekend, we've been ranging sideways here. We had the local swing failure pattern. So we grabbed the liquidity of those highs and we dumped back down. Now, we can look at the range of this weekend because we started forming a range since really these highs on Friday. We can pull a fixed range volume profile and we can measure this. And you can see right away here, our value area low is holding many times. Every time we come down close to our value area low or directly to the value area low, we are bouncing. Every time we come up to the value area high, we are rejecting, except for that short squeeze up to take the local liquidity. Now, we are seeing a bit of a bounce here. If we do a Fibonacci pull from the high to the low here, and let's go to the 886, you can see the 886 was tapped, so we do have a higher probability to come down to take this low here, which is a semi-equal low with this low. We have a lot of liquidity resting down there below. Also, if we go on to the liquidation heat maps here, you can see this is just the last 24 hours liquidation heat map. You can see the majority of our liquidity is resting below us, below our lows here. All the equal lows here at the value area low, and really even below our big low down here at 93K. We have a lot of liquidity resting down here. All right, back to the charts here. So yeah, Bitcoin, we saw a little bit of the low 91.2 swing failure pattern that was on Thursday. We made a whole move up on Friday. We came up to these local highs up here on Friday. And since then, we've just been ranging sideways. We've just been creating this range here. And Bitcoin's just continuing to trade in a range here on lower volume and lower time frame. We did have the local swing failure pattern. Now we do have some liquidity resting down here that we could come look at down below all these lows here. And also we've hit the 886, so we have a high probability of eventually coming back down to take these lows here. Now, this peach line that's on my chart now, I'm going to zoom out here onto the 2-hour chart here, and let's look at this peach line. You can see this peach line, this trend line here, has really been acting as our major support level here. You can see obviously low time wicks past it, but if I zoom out here on the charts, let's go on to the daily chart here. And I showed you guys this in a couple videos ago, but since this 49K low here, we've kind of been forming this parabolic move up. You can see this big parabola to the upside, this last big parabola. And so when we start to form a parabola like this, I like to take trend lines and I like to take them to major lows. So the first ray I made was from the low to the next higher low. Then I took a second trend line and I made it from that higher low to the next higher low. Then I took a third trend line. I made it from the third higher low to the fourth higher low. And you can see it's kind of forming this parabola that we have here. And so our strongest trend in this parabola is this peach trend line that we're pretty much at as we speak. And if we lose this peach trend line, we could see a dump down. I mean, we still have major supports before that up in this range here, but we could dump down as far as like this 82K, which is around the pitchfork midline of our big pitchfork. If we go look at that pitchfork real quick here, let's see, here it is. All right, so you see our pitchfork midline is also right around that second trend line there. And that would also be, it would take a week or two to get down there. So we'd have some nice confluence January 20th. So if we end up losing this, do not bounce from 87K. We could come down here to this level. It's a major support level to be watching down here now. And our third trend line, our third part of the parabola, is also in confluence with our lower pitchfork band. Now that is also around our major support of the 70K area, which also happens to be our golden pocket. If we do the golden pocket from the lows to the all-time high, and we turn on our golden pocket, You can see our golden pocket is there as well. It's also the value area low of the entire 7-month range that is this range here. So we have a lot of major support in this 72 to 70K area. This is definitely a level that I'd be looking for swing longs and possibly even spot buys. But that's too far ahead. That's too far into the future. So for now, we're just going to pay attention to local price action. All that we have to update on is local price action because it's been weakened. It's been slow grinding sideways. So let's go into this some more here. Let's go ahead and hide these other rays that we got on the chart. Where are they? All right, here. And let's just go into this. So we are continuing to trade in this local range here. There's a few ways we could pull this range. We could pull the range from the top of the move on Friday to present day. I showed you guys this one. We could also pull it kind of to the bottom here, maybe like this area here, where it's more of a sideways range. I don't like that one so much. All right, so I think that first range I showed you is the range to be watching right now. These kind of semi-triple lows in here, I think if we do come back down again, we could swing fail pattern all three of those lows, then see another move up. We do still have the important resistances above that I covered in the last video. There still are same resistances. Now, I want to zoom out here to the 4-hour chart, and I want to show you guys this. I showed you guys this in the other video, but really since that last parabolic move here, you can see Bitcoin's been trading sideways, and it's almost like a Model 1 distribution pattern or a type of head and shoulders, like a funky double shoulder head and shoulders here. And so what we can do here is we can take the fixed range volume profile from the top of this move, and we can just go sideways here. And look at this, you guys. We can see now, I'm going to delete this swing failure pattern because I showed you guys we got the swing failure pattern. This POC has been an important POC. It's been acting as support here, support, resistance, resistance. Once again on Friday, it was resistance. Today, resistance twice earlier today. So this POC here is going to be a pretty important POC if we want to continue higher, to flip to support and then continue higher here. Now this wave here, this correction up to the upside is still looking kind of weak to me. If we go ahead and continue and turn on our volume, let's go here. If we look at our volume here, you can see the volume here is pretty low in all of here. And the couple spikes of volume that we have are just those big red spikes. That was from the jobs numbers and the non-farm payroll that we had on Friday. That's that big spike right there. We did see a quick recovery though, and that's a green spike that's not quite as big. But since then, it's been very low volume on here. Actually, if we zoom in here, let's zoom into the 30-minute chart. And you can see just over the weekend, really since this price action right here on Friday, we had market close and almost no volume. And our spike that we did have was in red. And then earlier today during that short squeeze, we saw a little bit of green volume come in here. But remember, a short squeeze, if a short squeeze is not new money coming into the market to push the price up, it's old short positions that are either getting stopped out or liquidated, which is a forced buy position. And that's why the market pumps on a short squeeze. So we were seeing a short squeeze through here, and that was giving us a push to the upside. Now, if you do not see new money come in to support that push to the upside, you'll just dump right back down, and that's exactly what we did. All right, so volume is still looking kind of weak in this move. If we don't start to see something soon with this volume kick into the upside, then we could suspect this is some sort of correction wave that we're seeing here, and we might make a new low. We might come down to make a new low. So if we do speculate that this price action in here is kind of a corrective price action, we can do a Fibonacci pull from the high to the low of that price action. And let's look at the 0.5 here. Now you can see our 0.5. Now it is aligning real nice with that anchored VWAP from the all-time high. Earlier on Friday, it was aligning more nicely with the golden pocket. Now it has come down over the weekend. The anchored VWAP has come down to the 0.5, which is a very common corrective target for a correction wave. if this is a little bit of a correction here, and then we make new lows to the downside if we reject from here. Overall, though, we still are holding our peach trend line is our kind of last parabolic trend line that we're seeing here. And it's chopping around down here, trying to hold it as support. Overall, we keep wicking past it or losing it on low time frames. But if we zoom out onto the daily chart here, you can see really the daily, this daily, we did lose it and close right below it, but we were able to reclaim it right away. And then the last two daily candles have really made doji candles right on this support. So right now, this daily candle did start below it. If we cannot close above this trend line by the end of today, which we still have 19 hours left, 19 and a half hours, so we still have plenty of time for price action to develop. But I would be watching if we cannot start reclaiming this and closing daily candles above it, we might see that rotation down to the levels that we are looking for. So let's zoom in to the 4-hour chart here. Let's get rid of this volume profile. Also, just one thing real quick here on this volume profile. If we go to the 786, that 786 is in alignment with the value area high at 100-250-ish. That is the level to be watching for. If we do pump up to the value area high, we could watch for a rejection there. I still do think our golden pocket's also important, because if we pull the volume, fixed range volume profile of the entire since November 11th here, you can see it moves our POC a bit higher. It also moves our value area low a bit lower. And let's change this same fib pull to a golden pocket. You can see our golden pocket's right in there. So that's at like the 98.7-ish, 98.6 to 98.7, 98.3 to 98.7, excuse me, is a really important resistance as well, because this is our bigger range that's a little bit, I wouldn't say more important, but this is more price action. This is kind of what we've been trading in. Since this one here, POC is obviously lower and our value area low is obviously higher here. But the bigger range does seem to be, looks like we've been kind of trading more within this range rather than the smaller one. But until we reclaim that POC that we keep rejecting off of Friday and earlier today, then we need to assume that it is a resistance still. So our resistance, our support levels below, we still have the swing failure pattern of the 90.7 here. This 90.7 swing failure pattern into the value area low of the range. And let's see here. I think that's not that one. Oh, we do also have the swing failure pattern into that golden pocket and POC up there as well. And that is this very start of that descending channel. Let's see here. What did I just do? Okay, we finally broke that range to the upside. Or that channel to the upside. I can get rid of that. Okay. Yeah, so the 90.7K SFP, which was Coinbase's second pivot of that ascending channel, we have that into the value area low, that first purple box of support that I have marked out there. And then we also have the 87.3-ish, 87.3, which is the 1-to-1 ABC correction target. We've also got a daily down there. That's going to be an important spot to be looking as well. Let's see. I do believe, okay, this is our POC and golden pocket there. And then we do, yeah, okay, actually this purple box here is our large 382 into our daily level at 89.9-ish, 89.8, 89.9. And then we have the 87.3 support level below that, which is our daily here, our 1-to-1 correction target here, right on top of it. And I believe we have something else there too. Okay, well, that's the support level. We know we have that down there. Those two boxes, we have 3 boxes down right below us. It would be nice too. We do have some liquidity resting below the lows we made on Thursday. So if we come down to these lows and swing fail pattern these lows, it would be nice to swing fail this low and the 90.7K low at the same time. And then we might see a move to the upside. Now, if this is a corrective wave and we're going to end at the 0.5 and the anchored VWAP, then we might dump much lower. And in that case, we could do a Fibonacci, trend-based Fibonacci extinction, and we can measure the move there to see where our targets would be there. All right, so I'm going to get rid of some of this stuff. I'm not going to delete that. I'm just going to hide that. We're going to hide some of this stuff, clean up the chart a bit. I'm going to hide now this peach trend line that I was showing you guys. And let's get rid of this here. Okay, we're going to go into some larger looks at things. So I talked about this in a few videos ago. I'm going to zoom out to the 12-hour chart here. And I showed you guys a new channel that I had found based off the very start of kind of this sideways price action here. And I bring it down to our lows that we made. So that's this large channel here. All right, now, actually, this channel was formed from this low here, the very first major low on the daily of kind of this sideways price action. And then I took it to the second higher low. I created this before this low was made here, but I took it to this low here, and then I bring it to our all-time high. And you can see how nice this channel is being respected. Rejected from midline, pumped above it, was kind of chopping around right above the midline, then dropped through it. Midline was here, midline rejected to the dollar here, here, here. And then we rejected from the midline again here. And you can see we came down to the bottom of the channel, and we are holding the bottom of the channel as support for now. We cannot lose the bottom of this channel and close 12-hour or daily candles below it. So it is still showing a sign of strength here. This channel could continue to form. And if we do pump up to the midline, we do have the swing failure pattern of those 102.8, 102.7 highs into the midline. And now that might take a few days to get up there. So we would see some good confluence of a swing failure pattern into those highs. Also, if we do go to the liquidation charts, we can see if we zoom out here, let's zoom out to like the 2-week chart. Here, you can see that we do have a lot of liquidity resting up there as well. Now, we still have the majority of our liquidity down below us. And remember, liquidity acts as a magnet for the market makers to come to. So I still think it is more probable to come down to the 89.9382 and daily, if not the 87.3 ABC correction target. But as of now, our support is holding, and you do not short support. You can short locally. I actually did take the swing failure pattern from earlier today. I've already taken majority of the profits out on that, and my stop is at break even. So no matter what happens, it was a win. But just if you're going to take local trades at like short trades at support, make sure you have a proper invalidation and proper risk management and a stop loss in place before you even long or before you even short. So that I can't say that enough to you guys. I hope that in this channel, the number one thing you get is risk management is key to success. You can have the best trade setups. You can have the best key levels. You can have the exact targets to look for take profits or stop losses. But if you do not use proper risk management and you do not trade your plan, if you do not plan your trade and then stick to your plan, then you will get wrecked long-term in the market. So it's very important to plan your trades. I took this swing failure pattern short. I think my entry was about 95,800. And so I saw the swing failure pattern of this high earlier today. As soon as we confirmed a candle close below it, I shorted. I put my stop right above that candle high. It wasn't even a 0.5% stop loss. And then I took my first take profit at the local golden pocket, which was also that peach trend line. I posted about this in the Discord. So I took my first take profit right here earlier today. And we obviously did drop past that. Okay, so just make sure you're using proper risk management, you guys. The big channel here is still holding. We still are trading within this trend. So we will continue to just follow this trend here. We could just continue ranging sideways for a while, guys, but volume is starting to look at from the start of this channel. You can see volume is overall decreasing as this channel is forming. So that is a sign that the market is starting to get stagnant and people are starting to get a little bit tired of this range here. Oftentimes when we start to form a bigger range like this that lasts a long time, the move either out of the range or, the dump, rejection from the range, we will see follow through happen on that. So we need to be aware of this. I can give you guys an example of that. Now, this range isn't near as big as the range that I'm about to talk about, but when we zoom out here, this last big 7-month range that we were in here, all the way from March until election day, we were ranging within this range for a long time. And then when the range finally broke, we saw an explosive move to the upside. So we could be seeing that right now on Bitcoin. It does look like Bitcoin is starting to form a sort of head and shoulders pattern or a Model 1 distribution pattern here. We do have, if we go into this pattern here, we can look at, where's that, the head and shoulders here. So we can just, our left shoulder here, our head here, right shoulder, and then we are forming that. So if we start to lose kind of these lows here, now I wouldn't trade solely off of this. I'd be looking at more local. I'd be looking for other confluence. Let's just say that. But if we start to lose this channel, let's say, then you can break down and 78K, 79K here, 78-ish is the target for that, depending on when we break it to the downside and if this is actually going to fully play out. Even if we break this so-called head and shoulders pattern to the downside, I wouldn't be looking for it to fully play out, or I would be looking for it to play out more and go down to 72 to 70K. But this is a bit concerning because head and shoulders patterns are topping reversal patterns. Well, we've been at the top, we've been at an explosive parabolic move up, and this is starting to form what looks like a topping reversal pattern here. So if we start to close daily candles below kind of that neckline that we were talking about, we can look for some follow through to the downside. All right, so that is what I'm seeing right now for Bitcoin on the higher time frames. I do want to talk about one more thing here, and we're going to zoom out to the weekly chart, and we're going to go into this weekly log channel that I showed you guys. So let me bring that up here. All right, so let's zoom out to the weekly chart here. Now, remember, this channel is a very important cycle-based channel pulled from the 65K all-time high to the 69K all-time high down to our bear market lows around 16K. And you can see this channel's been really, really nicely respected in the past. We are coming to the top of this channel. And I did say when we were first talking about this channel way back at the beginning of November, we hadn't even broke 100K yet. I talked about we could start to form a distribution pattern here on the daily up at near the top of this channel. And if we do form the distribution pattern and start crashing down into the inside, that would be valid because this channel it's a log channel based off of a cycle. So it is oftentimes you come up to the top of it like this. Usually you actually don't see harsh rejections like this. Usually you'll start to form a larger distribution range and then dump down. And it looks like that is a possibility right now as we're speaking. I still think we definitely could have higher, but if we do if we look at simple Elliott wave theory here, an impulse is a 5-wave structure to the upside. So we had our wave 1 here. Wave 3 is the most impulsive, highest volume filled. Wave 4, and then this could have been the completion of wave 5 here. We might see a much bigger, and I know I talked about this in the last video, if this is the start. Now this is on a weekly pattern, so this would take time to play out, but we might see a bigger ABC correction to the downside after the 5-wave impulse, and then the bull market could continue. This is starting to look like a distribution pattern on the daily, so we just need to be aware of this. We did have the confirmed bear divs on the weekly, and if we zoom out onto the monthly here, you guys, we can see some concerning things starting to develop here on the monthly. We do have monthly bear divs that look like if we do close this monthly candle red, they might confirm. Higher highs from the 74K high here. Our momentum wave is slightly higher up than the momentum wave we are forming right now. So if we do close this month red and this momentum wave fully rolls over, we will be confirming a monthly bear div. And if we confirm a monthly bear div, eventually these high time frame divs will play out. But you can see they take time to play out. Even between the hump of the first momentum wave all the way back here in February or March, really is about March, to now, that's almost a full year, 10 months here between the momentum wave. So even if this momentum wave rolls over on the monthly, it might take us till maybe May to be done, or June to be done with our correction, or to even get to our correction. So we could see the bull market continue until then, or we could see a range. That would be kind of painful if we saw a range up here all the way for a few months, just like we were ranging here for a few months. But it is a probability that we need to just be watching, a possibility. All right, so other than that, there's not much to update on Bitcoin. Bitcoin is still doing its thing, ranging slowly over the weekends like it usually does. If we go into our total market cap here, and let's zoom in onto the 4-hour chart, You can see that we're just still trading within our, we can re-update this. Let me get rid of that. We can re-update this range here. We're still trading within this bottom range here. But one thing I do want to cover is this ascending channel is still holding. So let me get rid of this here. And you can see we've been trading within this ascending channel. I even made this ascending channel before we rejected from the high here. But the low is really trying to hold. This trend here is really trying to hold. So if we do start to close daily candles below it, we might see a dump down. We could probably come take these lows here, or we might even come lower. And that would correspond with a move from Bitcoin down below as well. Now, on the other hand, if we do start to pump up here, we can do that golden pocket pull from the high to the low. And you can see we have some confluence up here. Really, I would say the pitchfork midline in red is what we should be watching rather than the channel midline, because it's going to take some time to pump up to here, even if we do it. See, this would take till Thursday. We would have, if it takes till Thursday, we would have some good confluence up here. And then let's do the fixed range volume profile pull one more time on this, and we could look at that. So our value area high is a little bit below that. Actually, it's probably closer to our 0.5. Yeah, it's right at our 0.5 here. So once again, if this is a corrective wave to the upside, then we do need to watch for the 0.5 rejecting us, coming up to the value area high and the 0.5, and then coming down, maybe taking these lows down here. So that's something we need to be watching on the total chart. Let's go to the total 3 chart. Now the total 3 chart we did lose that channel on the total 3 chart here. And the last time I updated this, I said we might be able to make a move up here to that 0.5 and back test. We still haven't gotten that move here. I also said if it takes some time, if we start to form a range here, and then it takes some time, then we might have the back test a bit higher up here, which is also the top of the pitchfork band, or the bottom, excuse me, the bottom of the pitchfork band. And that looks like it would be in confluence with our golden pocket as well. Let's check that out here. Golden pocket. Not really. It's more of our 786 there. So we have our 786 up there. So at 1.03 trillion is definitely a level we need to be watching for a possible rejection as well. We still haven't come down to this lower golden pocket. That golden pocket is from this low to the high that we made up here. We have the swing failure pattern of these internal lows into our golden pocket. That is still a level that I'm watching for us to come down to. And then, of course, we have our major support down here. That's our midline and a liquidity grab of these lows here, which I don't know why TradingView always does that with these charts, but we do have those semi-equal lows here. So that is twice the liquidity to come down and take. So we could be looking for a move down to there to take that liquidity as well. And in that case, we would see altcoins bleeding pretty bad. All right, so that's the update for today on Bitcoin. Hope you guys had a good weekend. And I will do some altcoin videos. I have a really, really busy day tomorrow, so I don't know if I'm going to be making a video or if I'm going to do an altcoin video, but I will give it a try. And thank you guys for supporting. Hope this video helps. Have a good night.